In this presentation, we will take a look at itemized deductions related to gifts to charity reported on Schedule A. We're going to be focusing in on the income tax equation down here for the itemized deductions. Remember that the income tax equation is basically an income statement up top, starting with revenue or income, minus the above the line or Schedule 1 deductions, adjustments for income, giving us the subtotal of adjusted gross income, then subtracting out the greater of either the standard deduction or itemized deduction. We're concentrating here on the itemized deductions as we do so. Remember that they need to be higher than the standard deduction in order for us to be taking them. So if you're considering the charitable contributions, you want to keep that into consideration, because if that's the only itemized deduction we have, you'd need a significant amount of them for them to be able to take us over and above the standard deduction. So oftentimes you would have something other than just charitable deductions, such as possibly the ownership of a home, mortgage interest, and the property taxes on the home. If that is the case, then the charitable deductions are more likely to be beneficial, as they will further take you into the itemized deductions and be more deductible. We're concentrating here on line 9 of the Form 1040, the standard deduction or itemized deduction. We're concentrating on the itemized deduction, those being reported on the Schedule A. We're focusing here on the specific part of the Schedule A, that being the gifts to charity. For more detail on this information, you can start your research at the instructions for Schedule A. We're going to include that, and you can also find it at the IRS website, irs.gov. Gifts to charity. You can deduct contributions or gifts you give to organizations that are religious, charitable, educational, scientific, or literary in purpose. You can also deduct what you give to organizations that work to prevent cruelty to children or animals. And this last one's going to be a specialized one that may not be applicable to all areas of the country. It says certain whaling captains may be able to deduct expenses paid in 2019 for Native Alaskan subsistence bowhead whale hunting activities. So although I have friends in Alaska, this was new to me. It doesn't seem to quite fit along with the charitable contributions, but obviously it's going to be something that was put in the law that's kind of a specific type of area. So if that applies, then you could see publication 526 for more details on it. To verify an organization's charitable status. So always when you think about the charitable contributions, you want to have the record of the charitable contributions, and you also want to make sure that you're contributing to a charity that you'll be able to deduct. Now, if obviously we're thinking about here a charity that is qualified for a deduction, when you do research the charities, you also want to research the value of the charity. Just because you can get a deduction from the charity doesn't mean that all charities are equal from that standpoint as well. You want to think about, what they're putting their money into and how much of their money is actually going to the benefit, the actual charity that they're doing, and versus the expenses of running the charity. How efficient are they at actually doing the charitable work that they are doing? So in any case, to be able to deduct it, you need to have the record for it, and you want to make sure it's for a qualified charity. So in other words, if you were to just go out and give money to someone in need, that wouldn't be something that's going to qualify. It has to be to a charitable organization and a qualified charitable organization. So to verify an organization's charitable status, you can check with the organization to which you made the donation. The organization should be able to provide you with verification of its charitable status. Use our online search tool at irs.gov/TEOs to see if an organization is eligible to receive tax deductible contributions. The following list gives some examples of qualified organizations. You can see publication 526 for more examples. That can be found on the IRS website. So we have churches, mosques, synagogues, temples, other religious organizations. We have the Boy Scouts, Boys and Girl Clubs of America, CARE, Girl Scouts, Goodwill Industries, Red Cross, Salvation Army, and United Way. Fraternal organization, if the gifts will be used for the purposes listed under the gifts to charity earlier. We have the veterans and certain cultural groups. We have the nonprofit hospital and medical research organizations, most nonprofit educational organizations such as colleges, but only if your contribution isn't a substitute for tuition or other enrollment fees. In other words, You can't basically pay for tuition or have a bartering situation. I'll give you a contribution and they'll give me schooling without having to pay tuition. Obviously, the contribution in that case by the trade would be for the tuition typically. Then we have the federal, state, and local governments if the gifts are solely for the public purpose. So you can actually write a gift to the IRS possibly in order to get a deduction for charitable contributions to the government, but most people don't do that one. You would look for another type of organization to get the deduction for gifts to charity typically. Amount you can deduct. Contributions can be cash, property, or out-of-pocket expenses you paid to do volunteer work for the kinds of organizations described earlier. If you drove to and from the volunteer work, you could take the actual cost of gas and oil or 14 cents a mile. Add parking tolls to the amount you claim under either method, but don't deduct any amounts that were repaid to you. Gifts from which you benefit. So then we have situations where you might be gifting something, but you might be receiving some benefit from it as well. So you might go to a charitable dinner or something like that where you're getting a dinner, but you're probably paying more for the charitable dinner than the actual dinner is worth. So some kind of situation like that. Gifts from which you benefit. If you made a gift and receive a benefit in return, such as food, entertainment, or merchandise, you can generally only deduct the amount that is more than the value of the benefit. But this rule doesn't apply to certain membership benefits provided in return for annual payments of $75 or less, or to certain items or benefits of token value. So if they're giving you something that's token value, it's basically not worth much at all, then you don't have to take that into consideration. That's common. They're going to get something if obviously they'll give you some kind of token thing and for the donation that you have. If it's a token thing, if it's a small thing, not worth a lot, then typically you wouldn't need to deal with that situation. You'll just take the amount of the donation in that case. For more details, you could see publication 526. Gifts of $250 or more. You can deduct a gift of $250 or more only if you have a statement from the charitable organization showing the information. So typically you want to do this anytime you have the donation. You want to keep a record of it in case of an audit. If an audit happens, they have at least 3 years within the statute of limitations, and they might ask you about it. You want to have some kind of supporting information. But if the gift is over the 250, you can deduct a gift of 250 or more only if you have a statement from the charitable organization showing the information. Number one, the amount of any money contributed and a description, but not value, of any property donated. So if you gave money, then obviously it's pretty straightforward. You know what the money is. If you gave property, it's a little less straightforward. They're going to give a description of the property that was given, but they're not going to force the people that you're giving the property to have to value the property, because obviously that's tough to do. You know, if you're talking to a pawn shop, they're really good at it. If you're talking to an organization that's not basically going to resell in that situation, they're probably not that great at valuing, property that's going to be received. So they can describe the property that they get, but probably not be as good at valuing it. 2, whether the organization did or didn't give you any goods or services in return for your contribution. If you did receive any goods or services, a description and estimate of the value must be included. So if you gave the goods or services and you got something in return, then again, we have that situation where at least part of it seems like a normal kind of trade transaction. If you receive only intangible religious benefits, such as admission to a religious ceremony, the organization must state this, but it doesn't have to describe or value the benefit. Limit on the amount you can deduct. See publication 526 to figure the amount of your deduction if any of the following applies. 1, your cash contribution or contributions of ordinary income property are more than 30% of the amount on Form 1040, line 8B. And line 1040, 8B is going to be that adjusted gross income number. So it's basically an income limitation, an income cap. They often use the adjusted gross income as opposed to the total income the tax code does when they're doing that kind of income limitation. 2, your gifts of capital gains property are more than 20% of the amount on Form 1040, line 8B, which is the AGI. Or 3, you gave gifts of property that increase in value or gave gifts of the use of property. Amounts that you cannot deduct. So these are amounts that you cannot deduct. certain contributions to charitable organizations to the extent that you received a state or local tax credit in return for your contribution. So you can see publication 526 for more details here. An amount paid to or from the benefit of a college or university in exchange for the right to purchase tickets to an athletic event in the college or university's stadium. Obviously, that's a barter situation. It's not really a gift because there's been some type of exchange there. Then we have the travel expenses, including meals and lodging, while away from home, performing donated services, unless there was no significant element for personal pleasure, recreation, or vacation in the travel. So when you're talking about travel, there obviously the IRS is dubious about whether or not the travel is charity or possibly a vacation. So that's, you can have restrictions there typically. Political contribution. So this is going to be a big one. Typically, a political contribution is not a charitable contribution. So they're trying to say that the charitable contributions should be charity out of giving and not out of politics, because you could think of political contributions as kind of charitable, but it's quite possible that if you were to allow significant deductions, that basically people that give very large political contributions may be doing so to get political weight or to put pressure or to influence the people in politics. And so they don't want the tax code to be involved in that process typically. That would be my rationale for removing the political contributions. Dues, fees, or bills paid to country clubs, lodges, fraternal organizations, or similar groups. So if they're going to be dues to some kind of group or society, then typically that you're going to be a member of or something like that. Again, that's some type of exchange. You're paying the dues for the membership. That seems like an exchange, not a charitable amount. Amounts you can't deduct and continued. Cost of raffle, bingo, or lottery tickets, but you may be able to deduct these expenses on line 16. See line 16 later for more information on gambling losses. So that would be gambling losses as opposed to charity. Value of your time or services. So typically, if you're doing time to a charitable organization, so say if you go to a dinner and you're helping out with the serving of the dinner, and things like that, then typically you don't have a charitable contributions with regard to that type of charity, that type of charitable donation. Value of blood given to a blood bank, the transfer of future interest in tangible personal property. Generally, no deduction is allowed until the entire interest has been transferred. So you can't basically say, hey, I wrote a note telling this charitable organization that I will give them something in the future, and I've made the commitment today, and therefore I'm going to take the deduction today. Can't do that. You got to actually, the transaction has to actually happen to get the deduction typically. You have to actually give something, not a note or a promise to the future. Gifts of individuals and groups that are operated for personal profit. Gifts to foreign organizations. However, you may be able to deduct gifts to certain U.S. organizations that transfer funds to foreign charities and certain Canadian, Israeli, and Mexican charities. You can see publication 526 for details here. Continued amounts you can't deduct. Gifts to organizations engaged in certain political activities that are of direct financial interest to your trade or business. So again, they're skeptical about political activity that is going to be for influence, that you're trading basically political contributions for some type of political influence that may be gained if, say, someone wins something in politics. Gifts to groups whose purpose is to lobby for changes in the tax law. So again, you're trying to influence the tax law. The thought there would be that you're doing that for personal benefit, not out of charity. Gifts to civic leagues, social and sports clubs, labor unions, and chamber of commerce. Value of benefits received in connection with contributions to a charitable organization. Cost of tuition. However, you may be able to deduct education credit. So the cost of tuition isn't a charitable contributions, but there are other ways you can possibly benefit, like credits or other deductions. Carryover from prior year. So we've discussed limitations on charitable contributions. So what if I had more contributions than I was able to deduct? The question then would be, well, can I get some benefit from them in some year other than the current year, typically rolling them forward to the next year? You may have contributions that you couldn't deduct in the earlier year because they exceeded the limits on the amount you could deduct. In most cases, you have 5 years to use contributions that were limited in an earlier year. So most cases, you're saying, all right, the charitable contributions were limited due to an AGI limitation or something like that. Therefore, we're going to just carry them forward. Tax software is very useful to do this because it'll help you with that carry forward process, hopefully be able to take that deduction in the following year, which I was not able to deduct in the prior year due to some type of restriction. The same limits apply this year to carry over amounts as applied to those amounts in the earlier year. After applying those limits, enter the amount of your carryover that you are allowed to deduct this year. You can see publication 526 for details on that.